Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Friday. It's been one of the calmest weeks trading I think we've had in a very, very long time. But the market has been moving in the overnight session, so let's come in and take a look, shall we? So here we got the 10-year Treasury, and like we're starting out at the highs of the week. Now, I don't remember really reading anything in my synopsises to explain why we're up here, but I don't know. We'll go through. Maybe we'll see some reasons. Well, one reason is that the S&P did take a hit yesterday. It was kind of interesting because the Treasuries didn't really come up with the S&P going down like they did 2 days before. But it looks like, you know, the E-mini caught up in the overnight. So that's kind of curious. Here we got oil. Oh, wow. Okay. I'm thinking I'm going to go back and do a double reading because why is oil just back down at the lows? What? Okay. Okay. Something's going on here. Gold and silver, they're taking a pummeling too. I think that we've been seeing some strong dollar action, though. I think that's why gold and silver did what they did. What about copper? Okay, copper off of those highs, but not too bad. Yeah, so here we go. Okay, so the Japanese yen did not really do anything. Yeah, I mean, that's good. The yen didn't move too much, though. But we did get that dollar strength coming in yesterday. So that was kind of the really big change was the dollar. And then Bitcoin also taking a little bit of a hit from that dollar strength. But nothing too crazy. So, oh man, maybe I need to blow my nose. Come back over here and blow my nose. All right. Oh, I thought I muted myself for that. Oh, well, whatever. Whatever. If there were gross noises, I apologize. I sincerely apologize. Okay, let's make sure we turn on the robot. Oh boy, here's a suggested. I still had. Let's see here, 24K MBO at 24 in ZN. I don't know, it was a pretty big one. I don't know if that's like too unusual though, but it's unusual for like the past week, isn't it? And I hadn't done that in the past week. Let's see here. Over the past couple of months, I've noticed a negative tone on LinkedIn when it comes to the future of job security. It seems that in just a few years, the experience we worked so hard to gain is suddenly being labeled as obsolete because someone can get answers from an LLM chatbot or bootstrap applications with coding agent. But I can't think of a more flawed way of looking at it. Original design and implementation of robust custom software with high availability and security compliance comes from experience and judgment. If anything, LLMs have made us more productive, but they are nowhere near replacing original thinkers and creators. We've always copied and pasted code, and now we are just faster at it. The pursuit of becoming a great engineer is in the business understanding and creativity of how you design software to meet real demands. Do not give up on yourselves. This is the time to double down on your mastery. I mean, I generally agree with them. You know, something when I worked for the company that made CRM software for car dealerships. And there was one engineer that he wasn't labeled as a staff engineer, but I think he was like the closest that they had at that company to a staff engineer. And he was like on the AI thing like really early on. And he was always like, oh, you know, pump it into AI. And I always felt like that wasn't a very useful answer. Like, oh yeah, I already asked the AI. But like the thing was, is I just didn't know what to ask, you know? So now I in a place where I'm very senior compared to literally every other engineer in the company. And you know, they're not keeping me. So I'm trying to get this stuff that I've been working on handed off so that it gets used in some capacity. And there are a lot of things like they're thinking, they're like, oh, well, so we're going to have to deal with this in the future. We're going to have to change it for this in the future. I was like, yeah, but like I already built the thing and you have the AI. But I don't think it's very comforting because, not to them, because they don't necessarily know what to ask it. Because the particular domain is just so foreign to them. Which says to me that they are still not a replacement for a senior engineer with real experience. And are they a replacement for junior engineers? Oh, I don't know. But I kind of feel like no. I feel like that having the LLMs around just makes more work get done. And more work means even more work. Right. Just creates even more things for us to do. We just become more productive. I don't know. I really think that if we were in an era of low interest rates right now, like let's say that there was a sudden recession in 2022 and the same month that ChatGPT was released, that there was interest rates went to zero. So and then had stayed at zero this whole time. So if this whole period had been a period of low interest rates, I think that companies would be hiring up the wazoo and everybody would be talking about how insanely productive AI has made everybody, and yet we haven't fired anybody. And this is just like every other kind of technological revolution and yada yada, you know. It might have, and I would probably be saying, well, it does seem like that's what's been happening, and that is what I would expect to happen, but let's not say that it's the final answer on it, because financial conditions can change, and things will change over time, and it hasn't been long enough to really see the long-term impacts of AI yet. That's probably what I would be saying, right? Oh, AI. So there is definitely more activity here in the Treasury today. That was a lovely liquidation in ES and GC yesterday. I mean, it wasn't that bad in gold and silver. Although, I don't know, man. So the sell-off yesterday and the sell-off on Tuesday in the S&P really felt different to me. Like, well, I'm not entirely... I think that yesterday was mostly about the dollar. I think it was mostly about the dollar yesterday. But on Tuesday, well, I kind of thought that maybe they would come in and sell it. I did kind of suspect that they would maybe sell it. And what surprised me at the end of the day was that they did sell it, but like there was like some very specific news items and stuff that were the reason for the sell-off that I wasn't expecting at all. So I kind of feel like it was just pure luck that we had called that one on Tuesday, right? And then they like completely erased it back. So like it feels to me that this market is vulnerable. That like people know they've made a lot, they've probably made more than they should, and that it could come crashing down very, very quickly if they're not careful. And October is a time period where, you know, you have negative markets. It seems like we've gotten through the worst parts of the year, so we might be okay. But they're still on their toes, you know? You haven't had any luck vibe coding a trade bot yet? No, you know, I haven't really tried a lot of vibe coding trading bots. I have spent a number of times asking them for trade ideas, you know, like the idea of a bot and then me programming it. I haven't tried vibe code because when it started out and I would ask it to do NinjaTrader stuff, it was just so bad. Oh, it was just like, I can write this so much faster than the LLM can. I bet you that's probably still
Order
the
submitted.
case. It's kind of funny to think about, but like, you know, the thing that I probably have like the most experience in doing, that I'm probably the best at, is coding in NinjaTrader. You know, like I don't have to look things up as much, and if I do need to look something up, I know exactly where it's going to be. I don't find myself perusing Google very much for NinjaTrader stuff. But then the other thing is that, like, especially early on when ChatGPT was just released and people started to go, oh, actually, you can use this for code. I got so many people. It's not as much anymore, but at the beginning, I got so many people trying to vibe code something in NinjaTrader and it not working. And I kind of think that people mostly gave up. So one of the big issues that you'll run into in vibe coding is if you're coding something where the API has changed a lot. So NinjaTrader is okay in that respect. The API hasn't changed massively. But you can just see, like, it's all reinforcement learning. So if you're coding in Python, and like if you're working at OpenAI and you're coding things in Python, and then you see it make this mistake, then you go, oh, we'll make a test case for that. And then they make a little case, and there's reinforcement learning that teaches the AI how to do that particular Python thing correctly. So what you're going to find is that the AIs are really, really good at like Python and React, and like terrible at other languages. Don't even get me started on Rust. And every time people are like, oh no, it's like great with Rust on this, and then I go and I try and it just like flops hard again. But interestingly enough, so one of the things I found with Rust is that it is able to explain a technical problem really well. Like it's some problem that people have run into before, and there's comment threads on it on Stack Overflow or what have you. And it will be really good at explaining what's going on, but it won't be able to use that explanation to fix the code. I run into that one a lot too. I think here, so man, it's I hate thinking about it, but it's everything right now. Is the job I'm working right now ends next Wednesday. And we're probably going to get a lot more time to work on things. And I think the first video I'm going to make is going to be a video about vibe coding. Because I have learned a number of things that I think really, really help. Although it is kind of more of an approach than anything. And because I feel that what has happened is instead of saying, oh, this is a new tool that opens new worlds to me, I should learn as much as I can about this tool and how to use it effectively and how to use this tool to level up my own skills. Instead of that, everybody seems to think, oh, cool, this is this tool that will just do everything for me. Right? And if you take it from the perspective of, oh, it's just going to do everything for me, now I can do these things that I couldn't do before because I wasn't willing to put the time in to learn it. Like, if you go with that attitude into it, you don't get very much out of it. But if you go in with the attitude of, this is a tool and it can help me level up, that's when you can start doing insane things with AI. So I want to make a video about that. Now, speaking of robots, our trading robot did take a long there. I was a little bit confused about why, but I think I can see now why. But it also appears to me that on the time frame that we're trading, that it is oscillating between long and short really high. So one of the things I'm thinking is like the original concept for the bot, where like you hold it for an hour. Because, well, if you're getting an imbalance now, you're likely to have an imbalance again in an hour. I think that I'm running a little bit too high of a time frame on it. Like, I'm running it on 1 minute bars, and the imbalance is just over the last 10 minutes. So an imbalance, that much of an imbalance over 10 minutes is too sensitive. It'll get long and short both ways in a market that's not really actually have any direction. So maybe if I smoothed things out, filtered them a bit more, that particular setup would be better. But I also want something that takes a lot of trades. So I don't know. I'm kind of thinking, okay, let's get something that just has really close targets. So, well, the other day I did it and I was like, well, this should like win almost every time, and it didn't work out that way. So, I'm gonna bring them in a little bit and we'll see. We'll see. Okay, so let's see here. I'm thinking about things. There's this guy on Reddit that keeps asking me like tons and tons of questions. And we need to get him to just come to the stream. When you say liquidity, let's assume a stock liquidity is 500 million and I enter a trade with 5 million. Does that mean it will go up immediately 1%? No. You have to calculate it. Okay. Oh, he is there. I was like, I'm going to message and then he's not going to see it for a couple of hours. And I'll be like, darn it. Hey, he says he'll be there in 3 minutes. Oh, let me get rid of that. So I keep seeing like advertisements by LinkedIn that
order canceled.
It's going short. That are saying that they have like a new AI search sort of a thing, but I'm not seeing that. Let me try if I just do a... Yeah, see, it doesn't... So, like, something that I would like to do, or that I'm interested in right now, I guess. The tech market just really sucks. So a lot of people are like, oh, I'll reskill into something else. Well, I don't want to do anything else but tech, but if I need to do something in the interim, I will. And like the tests that I've taken and all of the knowledge that I've built from the Series 3 license for commodities trading and the Series 65 license for investment advising would be things that I should be able to do something with, right? But I'm not able to search and find. Like if I go to something that really irks me about LinkedIn is if I go to LinkedIn, it like almost doesn't matter what I search for in my job search window. It will show me the same jobs because the jobs that pop up are the ones that it thinks are the best based on my experience and not based on what I'm searching for. So if there are some opportunities out there to do some like Series 65 stuff, like investment advising on the side, I can't find it. So I'm searching here, but I'm not. See, I searched for Series 65, and everything that shows up are SRE roles. What if I go to like... what was this? Oh yeah, I use this one website called JobRight, and it does job listings and everything, but it like straight up will tell you, okay, here's how good your here's how well you match, and like here's how you need to fix your resume. Fix now with AI. It says my resume is a B. That's interesting. Interesting that it can give me a rating like that. And I'm curious the things that it's pointing out to make improvements seem like small things. Like I wouldn't expect those to have a big difference, but this one, doesn't have a search.
Order canceled.
Yeah, we'll still find a job. I think it's gonna take a while, man. I remember, I think maybe we were on stream when I read it, but I remember I remember reading a thing where the guy had gone through like 2 temp jobs and all of this stuff through the time period. And I was like, oh my gosh, that's so awful. But it's kind of looking like, yeah, we're going to have to go through that too. Oh, interesting. They give you credits. Okay, so Uzi is talking about taking a short at 28, presumably because that is like the starting from the overnight session, the implied volatility projection. And Apol asks, would you put it at 28 or 27.5? Well, so something interesting is happening here, though, that there is like an iceberg at 27. So I think that you got a little bit of a conundrum. Like, if you were able to get filled at 27.5, I think the chances of it going through and trading 28 and maybe even beyond 28 are actually pretty high. So that would maybe presuppose putting it at actually 28. But I'd keep a top site 29.5 would make me assume the 30 years is going to drag everything higher. I think that what I would rather do is see it do its thing there first and then catch it after it's already started to turn the other way. Granted, you're taking on more price risk if you do that because you're not going to get as good of a spot, but it was a solid approach, a little confirmation and all. Yeah. But I'm only saying that in this situation because there seems to be huge icebergs at 27. So that kind of makes me think that like if you have an iceberg and then they start trading at 28, like that's a pretty good setup for a little bit of a burst, you know? And if it doesn't, that can be a good setup for, you know, whoever was the big buyer is finished and it's going to go back to the other side of the range. So my thinking is, you know, like those kinds of order flow setups on their own, I wouldn't say are terribly reliable. But if we're combining it with a spot that we think is going to hold, maybe that'll work. The 30's next target is 118.04. Oh, geez. Okay. And trading steadily above 14 has me a little concerned they might try for that. Well, I'm thinking it would be incredibly odd for them to go for such a move at the current time. Like, we haven't gotten any real signs that there's like a really, really huge imbalance. There does appear to be more trade today, but I'm not necessarily seeing signs of a strong imbalance. So to go that far in ZB would be kind of weird. And like the timing of it would be weird, right? Like it would have to be in response to something that they're planning on doing when the S&P 500 opens up or something. Well, I guess we should also check. I didn't really check the news today. Okay, we do have University of Michigan sentiment. Goolsby speaking. By the way, what do you get for the S&P 500? Because when I tried calculating it yesterday, the numbers that I was getting out for the S&P didn't seem to make much sense. I think I was doing it wrong. But you take the percentage number that they get and divide it by 16, right? Because I did it in ES and it came out to be 0.8%. And I was like, that might be too high. Oil is still taking a hit here, by the way. Oh, is oil coming down because they did get a deal in the Middle East?
Order filled.
Okay, well, it worked out for the robot. Although, when I look here, the strategy, it's realized the negative 102. How did it? It must have taken a bunch of other trades earlier. Oh, it did. Oh, wait. It was, every single one of these was a, yeah. Oh, wow. It's taken 3 trades already. That's pretty bad. Since SPX is already decimalized, that should be all I have to do. I guess maybe it's just 0.8. Maybe I was just dismissing it because we weren't anywhere close to those levels, you know? Like don't you think it's a little bit weird that, like, we're testing those levels in basically like the first 30 minutes of every session when we've been looking at this? I mean, not like every session, but I would say more often than not. Wow, really? Uzi says sometimes they've tested before I get done drawing them. That's interesting. Let's ask ChatGPT. See if ChatGPT. That's a smart angle. Brown nosing. Yeah, upside target for ZB was 118.04. That's kind of like the next step that they would go to. I'm a little bit skeptical if that robot would have actually gotten filled at 25.5. Because like only 17 contracts traded there.
Order submitted.
What's it doing? Oh, it's going short again. Well, I think I'm supposed to go short here, right? Oh, no, that's not what I want. Let's I'm not taking this one because like it's a high conviction trade or anything. I'm taking this one because we want to take more trades, and that was the setup that we discussed earlier, isn't it? So, well, it looks like that I won't get filled on the limit. I think I can be patient though. Don't hit it yet, as he says. Yeah, like I'm worried that that bid will evaporate, but I don't. It's not happening yet. So. Well. I'll leave that order there because I have such a good spot in line. Well, so it's interesting. It actually, I sent something to ChatGPT about like, how can I find things that would maybe make use of my Series 65 and Series 3 licenses? And it actually did find me something that I think I could apply to. I think that they want a student, so I don't know if they would give it to me. But I guess it could still apply to that. Oh wow, I did find some on ZipRecruiter. That one I'm not even remotely close to qualified for. I would need entry level. Who are these guys? Oh, did it fill all three of those? Wait, how did it do that? Hmm. Remember 28 after. Yeah. Well, it doesn't seem to be going very well at the moment, does it? Hmm. These guys in Utah that I'm looking at here are looking for people to train AIs. What they're doing. That's what they're doing.
Order filled.
Well, you want to say like 28.5? Book is heavier on the sell side. Yeah, like everything about that setup looks terrible, doesn't it? I think that just Seth doing Seth things would bail at this point, but I don't think that would have the same entertainment value. So let's just let ourselves get stopped out, huh? I would after 27.5. Well, yeah. I mean, I could do a stop volume at 27.5 instead. But like, I think that's really likely to get to trade now. one of the irritating things with the Series 65 is that the Series 65 on its own doesn't qualify you to do much. Most of them want you to have the 65 and the 7. That's life. I can't win if you don't. Well, I think that in some cases the only way to win is to not play. Like I don't think that I would ever take this trade on my live account because it's just too purely technical, you know? And like the thing that bothers me about the market right now, if we come back and we look at this, it's going between extreme imbalance, like between 40 and 60% very, very quickly. And the cumulative delta is all over the place. There's absolutely no trend in cumulative delta. And, you know, the imbalance was very much in favor of a sell, and we pushed back up to the highs with hardly any problem at all. So that all says to me that this is a situation where I wouldn't expect my order flow to actually give me good plays. So then we're only relying on the volatility. Yeah, we're basically relying on our volatility projections. Well, there could be a little bit of a stop out and then a return. I'm still kind of thinking that they will bust 28, but then like not very much. Like it'll fizzle out immediately afterwards. Like maybe a better play here, not that I see any way for us to have seen this play, but the better play would have been to buy it down here and be taking it off right now. And Steffa says, how are you doing? Are you ready for the weekend? I guess I'm doing okay. Man, I'm really frustrated because I was negotiating with the company that I was working for right now. I could have a permanent role with them right now, and I think that I just underestimated how stupid they are. It's not necessarily that they're stupid, but they don't have any flexibility to do the thing that is like obviously the correct thing to do. And now there's nothing I can do. Oh, geez. So now LinkedIn is showing me people that past the Series 65, but it's not showing me how to get jobs with the Series 65.
Order submitted.
Oh, that's interesting.
Order submitted.
Did it? You know what? I really hate that NinjaTrader doesn't have a good way of showing you, like your past trades without going into the trade performance thing. Today. It says it's taken 4. But it did, but one of them did take around the right day, right? 10. We did have one did reach its target, so how come it's not seeing that one? Select the data and the profit and plot it. And maybe. And just, so why is it not picking them all up? I don't really feel like messing with it right now. It is kind of weird, like the market definitely flipped there. It was only one tick down. It was only one tick down. Like that is definitely the kind of market that like I would normally avoid. And then on a Friday to boot. No stupid questions. Why isn't the Gaza ceasefire massive news on Reddit? Right? Dude. Like even on conservative websites, I feel like the news on the Middle East peace deal has been really non-existent. Like how Nobel Peace Prize avoids action. Oh, come on. If Donald Trump is going to get the Nobel Prize, it's going to be next year. Yeah, the activist base doesn't want its problems solved because then they'd have no purpose. I think that to me, it says that all of these people that are, you know, acting so pro-Palestine on social media, that it really is performative. That they're doing it because they've been told that that's the good and moral thing to do, and not because they really intrinsically care about it, you know? Lion, hi Seth, came from Reddit. Oh yeah. You're the guy that's been sending me a trillion questions, right? Okay, here's why I wanted you to come on the stream. Because the question that you're asking is kind of hard for me to describe in text. Where's my pen here? There we go. Okay. The change. What is it that we do? Actually, I don't want to do it like that. I want to do the F of Q, which is to say the change in price based on a large meta order of size Q tends to follow a square root law, which is equal to y, which is a scalar unique to each instrument. I think they call it a scalar. But anyways, this changes between each instrument times omega volatility times the square root of Q, which is size of order, over V, volume. So what you do is you execute an order, or you know that somebody was executing an order, and you know when they took it, like what was the average volatility of the market at the time, or maybe you could use the implied volatility, and you know how much volume was traded during that time, and you know the size of the order that they executed, and then you see how far it moved, you can calculate Y. And then forever after that, you can just use the same Y, and you can say, okay, so I know the Y, I know the current volatility, and how much volume I expect to be executed over the next 30 minutes. And I'm going to execute this much. How far is it going to move it? And that's how you calculate it. And this is how, like large banks, when large banks are executing large transactions for like Elon Musk, for instance, this is how they calculate the impact. And they have these models that will do it very, very quickly, because like a dark pool, for instance, is really them giving them an opportunity to do this. So they're saying somebody out there wants to sell X amount. Okay, well, if I took the other side of that trade and then turned around and executed it on the open market, sold it for them on the open market, could I sell it more efficiently than the price that they're asking for? Right? And that's how block trading and dark pool trading and stuff like that works. So, is it like strictly useful for like us as a retail trader? Well, not really, unless you're like a really huge fish. But knowing how they execute this does end up being useful, because you can kind of see the hints that they're doing it. Because they tend to do it in waves. They tend to do it in waves like this. And then it comes back, and then the next one won't be quite as much. And then the next one won't be quite as much. That's usually the way that they do it. Because if you look at like the amount of volume that they're transacting, it tends to go like, over time, it tends to be like this. They execute the most at the beginning. Because you execute the most at the beginning, that gives other people in the market the least amount of time to react. Right? You do the opposite. If you really want to make like the most money and you're trying to trick everybody, then you do the opposite and you do most of it at the end. Yeah, like a trend. This is why the like bear trap continuation pattern happens. Unfortunately, it's not like if you see this and then you take a trade here that you have a higher probability of it going again. Doesn't work like that. It can happen randomly. When that happens, it's not really predictive that it's going to happen again. But if you know that somebody is executing, you know that it will look like that. Get what I mean? The pattern is the result, not the entry signal. See, technical analysis guys, they've got it backwards for the most part. And because they execute the most at the beginning, that's why like you want to know before they start executing it. You want to know that like, well, it's Friday and they probably have this position on and they don't want to hold it over the weekend, so they're going to do this. Or like we just did here just now, well, implied volatility says 112.28 for today in ZN. So if they were to push beyond that, that would have to be somebody really big coming in and pushing, and I don't really see any reason for anybody to be doing that. So the chances are that the market makers will hold it, and it will come back down into the middle. I'm predicting future flows based on what I know about the market, and getting in a trade before I actually see that flow. But like maybe I wait until there's just a little bit of confirmation for it, right? I don't know. With the trade that we have on right now, I don't think I want to brag about it because I'm honestly still a little unhappy with how it's gone. But I did do the right thing by hanging on, didn't I?
Order canceled.
Okay, so see, like with that one on the robot, like it was short, so it did pick up at least one tick, didn't it? Now it's long again. Strategies. No, it says no position. Oh, well, it's probably trying to take a long, but not getting filled probably. So if I come back to the trade performance though, is it going to show me is it going to show me 5 trades now? No, it doesn't. Like, this is broken. This just straight up doesn't work. Well, it does show that I got 1. Oh, but then it also says no. We just want from the 10th to the 10th. Well, maybe it did. But there should be 2 winning trades. So I don't know what's going on there. Your trade is off to a better start than I think the robot is trash in this kind of action for sure. So like the whole thing with the robot was to find out if the order flow imbalance actually was an effective trigger. And we did some back testing that kind of suggested that it could be. But since running it live and everything, I feel that it is not really any better of a trigger than anything else. I mean, like nothing at all. Like, hey man, that's gonna go. Oh wait, so you waited for the 2-year to touch 08 and then you went short. Oh well, then that is actually doing really well, isn't it? Especially that last tick. Huh. Well, so here's the thing that I find weird about this thing that we've been doing with your trade lately is that like I think there's something else to it. Like I think that there's something else that you're doing in terms of how you're executing it that is really, really helping you out that you don't realize. Because we walked through like the whole scenario and like we talked about like 2 different ways that you could maybe approach using that level to try and take a trade. But what you did was way better in terms of results than either of those 2 options. And it's not like you are always waiting for it to do it in the 2-year, right? It's like somehow you're always looking at the right one. So I find that curious. The volatility window gives you specific levels and seeing how all 4 trade at the moment you want to place a trade. Okay. Well, I totally understand looking at all four, but I still don't think that if I was looking at all four that I would have made the same decision that you did. I'm actually paying attention to the trading. Wait, are you subtly criticizing me there? That I don't pay attention to their trading? I definitely don't pay as much attention to ZB and CF as I should. Oh, you're criticizing yourself. Oh, okay. By the way, the trade that the robot took is like pretty awful right now, right? You didn't watch them as closely before. Oh, I see. I see what you're saying. But I'm still... So like, here's the thing. I think if you're if you're in a situation, well, you know...
Order submitted.
It could just be luck. Let's be honest with ourselves. It could just be luck. Okay. But so let's set up a slightly different situation. Let's say that Uzi has been doing this for 10 years and he's never had a losing day in 10 years. Okay. All right. So Uzi's never had a losing day in 10 years. And so we want to learn how to trade like Uzi. And he's willing to tell us everything and answer any question we have about how he's trading so that we can try and copy what he's doing, right? I think that if you're in that situation, that you really have to... I know you haven't been... It's a hypothetical. It's a hypothetical. Okay? We're just doing a hypothetical. In that hypothetical, if you're in that situation, I think that you want to do it literally exactly the way that he's doing it in almost every way. Because what most of us do is we say, okay, so he does this and he does this, but I don't believe that, or I don't think I'm as good at doing that, so I'm going to make this little modification here and this little modification here, right? And then you go and you do it, and you don't have the same success. What the heck? And I think it's because it could be, the edge could be in the teeny tiniest little thing about it. And he might not even realize that that's really where the edge is coming from. Like, he might think that it's coming from watching all four of them, but maybe it actually has to do with just the exact spot that he chooses to take the trade. Right? Like the exact price, and the fact that he waited until the 2-year had touched something specifically is the reason why it did so well. You know what I mean? And how would we be able to determine that? For us, for anybody, even the person doing it, to realize that on their own. And so you would have to duplicate what he does exactly, and then maybe through backtesting or something, change little parts. You know? Don't let that trade go sour, by the way. Well, I do need to think about what I'm going to do with it now, huh? Because I didn't really think about, like letting a runner run. So we're at 4.1 in the interest rate. That's kind of curious. Oh, actually we should just take it off right here. Should I be really... Now let's bring it up one. Because it touched the inventory cost basis, so that's probably where we want to take it off, huh? If you do, I'll be mad at you. Well, is that where you think I should take it off, or do you have a different idea about where I should take it off? Well, you were probably taking it from, well, let's see here. Choose rather second standard deviation. The 5 is trying first. The 205 is the first for the 10. Okay. But do you wait for all of them to have touched the first standard deviation before taking it or something? Right? Because like in this situation, you had a situation where the 10-year had touched it, I think. I think the 10-year had touched it, right? Well, I guess they never touched 28. You say 20.5 is the first for the O's for the ZN. Well, I'm not going to try and take it all the way for that. I think the cost basis is good enough. At least for that setup. Because I think ultimately that, you know, this is a technical trade, and so it's going to come back to balance and not necessarily the other side of the range. Of course, now that I've said that, it's going to go to the other side of the range, right? How good of an indicator is cumulative volume delta, and what extra confluence is what you would want with it? Yeah, so what do you want to see in cumulative delta? Like the sign to me that it's good trading is very consistent change in cumulative delta over a long period of time.
Order canceled.
So you can see that over that entire 45-minute period, they were consistently selling cumulative delta. And degree of correlation with price. That because you don't want like cumulative delta is going down and price isn't responding. That is like a volume is not decisive in this market for some reason. So we call it R squared, right? So R squared is like a measure of like how much does one thing predict another thing. But if you're looking at itself, how well does itself predict itself? There's an indicator in NinjaTrader called R squared. So basically, NinjaTrader's R squared is a measure of autocorrelation, right? So you want high degree of autocorrelation in cumulative delta and a high degree of correlation between cumulative delta and price. And that's when I would be more interested in trading it. And if there are, because a lot of people, like this is one of the things I think is funny again, and this is just an opinion of mine, but most retail traders are more interested in trading cumulative delta when there's a divergence. When price is going up and cumulative delta is going down, and what the heck is with that, right? And the problem is you don't know if cumulative delta is going to turn around and go up, or if price is going to turn around and go down. So just because you see an imbalance doesn't mean that you can predict which side of the imbalance is going to correct, right? If there's not that correlation between price and cumulative delta, that means that cumulative delta is not very predictive right now, so I don't want to trade it. They do it the opposite. I do the opposite of what everybody else does on that one. And I've brought that up many times. I've said that on Reddit many times, and I'm the only person I've ever seen say that. But problem is passive orders. Well, like right now, the market is very hypersensitive, right? So we're gonna have this discussion for our new friend here, Lion. So let's go back to our I think it's actually the impact. Yeah, the function is I of Q equals Y omega square root of Q over V. Now let's say that we know that our Q will be a certain percentage of the volume. So instead of Q, we have 1% of the volume, 0.01 V. Okay. So now let's do our algebra. Hope you were good in high school math, right? The V's cancel out. Now we get the square root of 0.01. Anybody know what the square root of 0.01 is? Yeah, square roots do weird things when they're below 1. Square root of 0.01 is 0.1. So the impact of an order of size Q, that is 1% of the volume, is equal to the volatility times 10%. 1% of the volume can be responsible for 10% of the volatility. Ah. Do you see it now? That's weird, isn't it? That's unexpected. Or like if we were to graph, you get this, right? This is the impact and this is the Q, right? Our little one lot, because it's just a single lot in and of itself, has more impact on a per lot basis, not a larger overall impact, but a larger impact on a per order basis than the guy that's trading like a million contracts or whatever. So the market is very sensitive to even the smallest orders. And that's what's going on right now, is that there's not like any really, really clear dominant force in this market right now. And so like every little sneeze by an algorithm makes it move up and down, which is why the robot up here is so absolutely terrible in this kind of action. So what do we do with this? On one hand, I'm kind of like a little bit miffed, like I don't think that is actually as effective or useful as I thought it was. Maybe it would be better on ES. We had some periods where it was like every time that this turned around, and you just couldn't tell which way it was going to go. But then on the other side, I kind of want to keep collecting the data. So I don't know what I want to do. Well, I can put the market order imbalance on a chart and not run the strategy and still collect the data. And I can put the inside bid ask thing on there and still collect the data. But because I'm thinking, okay, so do we just need to like switch the robot around and try a couple of different ideas and things like that? Do you guys want to do that? Or should we just be like, the hell with that and go down a completely different track? You know, you ever seen that picture where there's two guys mining and one guy gives up before he gets to the gold and the other guy keeps going? You know, it's like that. How do you know? How do you, like, it could just be like another dig. It could be, but it could also be there's no gold there, you know? Like, well, I'm a little bit miffed that I didn't, I put the limit order in at 24 and then it ticked up and I chased it and now I'm stuck. And it's time to get going. So I the little bits back and forth like that, I'm not worried too much about. I feel like that trade was fairly successful, although I wish I had executed it as well as Uzi had. I don't know. I am kind of leaning towards let's go down a different track. Because the thing that I continue to come to is that I feel that every kind of technical sort of thing that I've ever tried, man, is this actually true? Yeah, I think this is actually true. I think that I am one of the most experienced Ninja Trader programmers out there, but I am like one of the least successful algo traders of all time. like every kind of technical setup that I try doesn't work. That I've tried automating at least. Or at the very least, I wouldn't say that they don't work. There are a couple that kind of work a little bit, but they're definitely not as good as my discretionary trading. And my discretionary trading is still not as good as I'd like it to be. So maybe we should try to automate or better quantify at least and create more tools to assist the primary thing that I do instead. Which would mean remove the time series element? No, that's a bad idea. So you got to remember when you're doing statistics, you want something that is IID, which is, all right, where's my text tool? Independent identically distributed. Right. So there might be some ways to remove the time element.
Order canceled.
Like what is it that you use? I can't remember the name of these things. But there's a way to like shuffle the stuff around. But like a lot of people, they say, well, like use volume bars or use tick bars. No, those, like if you use a different type of bar type on the back test, it totally screws the back tests up. Find the prices thresholds. Well, but wouldn't that just be the same thing as like moving to a higher time frame? Or wouldn't that be like range bars? Right? So if I make a new bar when it's moved so much, well, we can just use the Ninja Trader back tester is probably just as good. But the big one is range bars. Yeah, don't use range bars. I know you're saying that you're a buy side in the space and everything. Okay, but I'm telling you, man, back testing on range bars is no good. Those aren't identically distributed, right? They essentially, you will get more bars when there's more volatility in the market, which means that your algorithm becomes biased to trade more in high volatility, which is when the back testing is the least likely to be realistic. Yeah, I did take out the trade. When I got my ding when it said 5 minutes, I took it off. Okay, here we go. Well, yeah, everybody uses custom backtesting tools. That's probably true. But we have the Ninja Trader backtester, and that's going to be good enough for what we're doing. Like, if I had something that was like pretty good, and then I was finding the backtester insufficient, and then maybe I would go make my own tools, right, for the backtesting part. But yeah, I early on, I made a lot of algos that were based on range bars. And what I always found was that as soon as I started to forward test it, that it did not perform like the back test at all. and that it was always trading at the worst time. It was always trading in a spot where, as a retail trader, you're just never going to catch. You're never going to get filled. You're never going to get the price that the backtester says. Like, there's more slippage in those spots. And like, honestly, if I want to like take a trade and hold it for like 30 minutes, you kind of want like the opposite of that, right? You want it to be like, I take a trade when it's relatively quiet, but I know that volume's going to come in. So I don't know. So I still have an issue with it, what you're saying, because how do you ensure that it's IID still? But I could see how maybe some of the algorithms that I made in the early days, maybe they would work if I was like at a big bank, you know? Yeah, there's probably all sorts of other tricks in there that I got to figure out. But like, again, like the thing that I keep coming back to is like, even if I have a data series that I think is there should be some edge in it, like that when that happens, there should be a higher probability of it continuing versus reversing or something like that. And then I start forward testing it. It doesn't work. It's terrible. And I feel like that it must have something to do with the way that I'm creating entry criteria. That saying, okay, when this gets to 55, then I enter long, is not sophisticated enough. And I'm sure that there are a lot of simple tricks in there that when somebody shows them to me, I'll just be like, oh, no doubt, but I'm not figuring them out on my own. I have been unable to figure those out on my own. So if you have some tips like that, you should come back on Monday and tell us, but I got to get going right now. Okay, guys? So I will see you guys Monday. Stay excellent.